Evening YouTubers. So I thought we'd have a quick sort of overview of the year. Now the new financial year started and the ISA allowance is back in play, refreshed for 2022 to 2023. If you don't know what the ISA allowance is, not really too sure what you're doing watching this channel, I'm just joking. Appreciate that some people might be watching this for the first time or to find out more information. So in the UK, you're allowed to put £20,000 a year into your or a ISA. You can have a cash ISA or a stocks and shares ISA. You can run both, but you can't run one more of one of each. So you can't have like two cash ISAs and two stocks and shares platforms. So what we'll do here is we'll have a quick overview of the whole portfolio now that the new financial year has started. So this is the what's left over of the traditional trading 212 portfolio, which you would have seen an awful lot on the channel probably around this time last year, all the way really through to the tail end of 2021. So you'll see here at the moment pretty much everything's in the red. A lot of these stocks here, we tried to dollar cost average into them, but just didn't have enough allowance left over last year to do that. So some of the investments are significantly down, but now the year has restarted, so I shall be able to do that. This particular one actually belongs to my other half, and it's significantly depleted from what it was because we've used some of it to fund our wedding. You'll see I've got portfolios just shy of 6,000 and free funds of £5,447. That is the remainder of the wedding. I know eye-watering, it's just one day, but I owe her to that after nearly 15 years of being together, if nothing else. So let's have a quick look at the portfolio. We've got Airbnb down just 6%. Apple is a relatively new one for this, so what I'm going to try and do is buy some Apple throughout this year. I've always liked the stock. It's always performed quite well for me. And that will hopefully mitigate some of the losses on the main three bad boys here in the fintech sector. So Block has not performed particularly well, down 36%, PayPal's down 46%, and Robinhood is down 51%. So that's a pretty big ouch. It's over half the investment. And this just goes to show how you can lose a fair chunk of money in the stock market. These stocks have been up for quite a lot of 2020 and 2021, and then obviously they've sort of crashed down in the most recent sell-off with interest rates and the war in Ukraine and so on. However, I'm not interested in selling any of them or getting our capital back out. If this value of money meant something to me, and not to say it doesn't mean anything, but as in if I needed it for some purpose, then the stock market is probably not a very good place to put it because of the fluctuation. So I am hopeful that long-term holds on these will do. I think things like Block and PayPal, they'll get into cryptocurrencies and so on like that before Apple do, being such a big mainstream company. But I do think Apple has probably taken a fair chunk out of PayPal's market with Apple Pay and the integration there. Block, obviously they're taking payments as well. I know PayPal take payments, so all of those technologies do pretty well, but Apple does have a habit of kind of sort of inventing stuff that kind of replaces these things. Like, I understand you'll be able to use your own Apple phone as a payment receiving device, so you'll be able to like tap your card on the back of it, or maybe from another iPhone or something. And also, as I say, with Apple Pay, Robinhood obviously is since its IPO's not done particularly well. In fact, it's way below its IPO price of, I think, was about £30 or so on, or $35. Yeah, obviously they've had quite a lot of turmoil, but I think generally people have got less money to invest now than they did perhaps through the pandemic, when there was lots of relief and so on. And again, you can see PayPal here is pretty much back down at its sort of pandemic levels, and again, Block, which was previously Square. That hasn't quite fallen quite so far. So that is the portfolio of Trading 212, or what's left of it. As I say, we're going to try and dollar cost average down on some of these positions, and continue to put money into Apple, Airbnb and so on. And I do believe those things. I mean, Airbnb I know is probably a little bit of a funny play against that, but I do kind of regard them a little bit as technology, because they're sort of app-based business, disrupting the travel industry. And I think as people decide to earn more, and tighten their belts a bit, and have holidays in the UK, they will look around, they'll consider Airbnb, and then anybody who's got like second properties that perhaps traditionally use them just as holiday homes will probably definitely be looking at the Airbnb scenario. So we'll nip on over to the Trading 212, the Freetrade portfolio. This is Trading 212, and we'll have a look at that. So here we are with Freetrade. As you know, this portfolio I've been doing updates recently. Was doing quite well until today. It's been a bit of a sell-off. I got down to about £200 loss, so pretty much back on our gains. Sadly, we started this sort of general investing portfolio, so this isn't in an ISA tax wrapper. We started that investment probably around the wrong time, around December, or this account rather than the investment, down December, January time of late 2021, early 2022. So there's not an awful lot up in this portfolio. Was doing quite well, as I say before, but has recently fallen down. So you can see some of the big ones here. Apple's still up, Alphabet has been up recently, so Neo, Matterport has had a bit of a crash on, Lucid is pretty much flat at the moment. Nvidia, unfortunately, has gone down quite a lot. That was at about a 10% return in the plus, and then Paragon and Tesla at the bottom there. So I won't go through every single one, but you can see some of them, like Etsy, for instance, are as bad as 34% down. And then obviously some of them are as, like Lucid, where you've only got 1 or 1.5% down there. Overall, the portfolio obviously is down just over £1,000. It has been down a lot less lately. One thing with Freetrade, so if you wanted to start investing and you did want to use Freetrade, there's a link in the description below. If you click on that and join and credit money, then you do actually receive a free share. Obviously I get one as well, and that does help support the channel. I don't do this for money. I do this really just for a passion of sharing my investing journey. It's not financial advice, so you need to do your own research into things. As you can see, I've lost money in the stock market, but it is a long-term play for me, so I'm hopeful that all of these things will return a profit in the long term. So we'll nip on over to Vanguard, which is where I've got my own ISA and various other tax things in there, so we'll have a look over at that. So here we are with Vanguard, and you can see here it's made up of several things. So we've got a pension. I've recently transferred that over from St James's Place, actually. I decided to put all of my savings into one provider, if you like, rather than have them quite so spread about, especially as the pensions here allow me to put the money into the S&P 500 or whatever index I'd like. All of that is in the S&P 500. These pending orders where it says 3 here, they are actually where initially I put it into a live strategy, but I've actually changed my mind in doing that now. And then you've got the ISA, which obviously is giving us a return of 2,300. I those of you that have watched the channel for a long time will note that I actually drew out most of my ISA about, probably about 18 months or so ago to buy a property. So that would have probably about 47k in it if I hadn't have done that. But obviously that particular property gave us a nice return on the refurbishment of it, and now there's a tenant giving us around about £500 a month net profit. And then I've also got this futures pot, which is a taxable account, obviously subject to capital gains tax allowances. You may have to pay tax on that in the future, and then that is sitting at nearly 8% return there. Again, there are plenty of parts to this, but mainly it's in the S&P 500, although we've got some in the FTSE All World tracker. But most of the investment is actually in the S&P 500. Quite a boring, safe, stable place to put it. But yeah, overall not too bad state of return. So we'll have a quick flip over to Coinbase, where I've got a little bit of cryptocurrency in there, and then we'll wrap up the whole video from that. So here we are on Coinbase, and you'll see I've got a small amount of holdings here, so we'll just flip on over to the assets page. Very little in reality. I think Dogecoin is lost maybe £4. I think I put like a tenner in it or something like that. Cardano has returned about £5. I think I put a tenner in that, and Shiba Inu, I think I put £30 in that, so that's lost a little bit there. Bitcoin is a little bit down. I think that was about 350 I've put in there. So the portfolio should be sitting, I think, at about £450. So it's about 115 quid down on what's been invested. I don't know if anybody knows, but I can't find a way here particularly of seeing what money you've put in and the value, and I appreciate it is effectively a currency. So, if you buy some, it is what it's worth, sort of thing. But the weird thing is, obviously, you can then look at something like, Bitcoin, and look at its 1 year performance and its all-time performance. So I would have thought that there was a way of kind of looking and saying, right, well, I bought it here at 200 back in 2015, and it's now worth 33,000, and that is whatever, 49,000% return. Lucky for anybody that bought it back then. Obviously, the reason it's gone up is a multitude of factors, but one of which is things like Coinbase. It's a lot easier for people to purchase cryptocurrency. So that's the kind of portfolio overview. If you did like the video, please don't forget to smash the like button, subscribe to the channel, comment below, all that kind of stuff. It really does help with the YouTube algorithms, which quite frankly are a bit of a mystery, because we've got some videos that have got thousands of views, or even a fair few hundred views, and then similar videos to that have only got like 150 views. So it's a very strange beast, the YouTube algorithm, but I think it likes the interactiveness of things. So anyway, that's the full kind of breakdown to things. So as you can see, the whole portfolio, as a general rule of thumb, it's doing all right, actually, despite the fact that you see, there's quite a big loss in the trading 212, and obviously the Freetrade one is down as well. But you'd have to go back to probably about 50 odd videos ago, and you will see that basically what happened was I cashed in all of the stocks and shares that were in the green in the trading 212, and left the ones that were in the red at the time, in order to release money. That actually had given me about a 28% return on my money. So if I'd have left that in there, things wouldn't look quite as bad as they do now. Obviously, it's about a £5,000 loss, but for example, on Lucid Motors, I'd actually made more than a £5,000. I think I made about £5,500 profit on that one. So we'd still be in the green on trading 212 if I hadn't have done that. I just chose to realise those profits because I had to fund the wedding somehow. And that is how I chose to fund it. I could have borrowed the money and left it all in there if I wanted to. Appreciate that feels a little bit like a short-term trade and it's not a kind of buy and hold strategy, but at the time it was the right decision for me personally. Maybe not always the right decision for everybody. And again with Freetrade, obviously some of those stocks have been up, some of them down, and I've just left that. And with the Vanguard portfolio as well, the 20 odd grand that I drew out to buy a property, that had about I think it was about an 18 or 19% return. So if you add that to the current returns that are in there, that would obviously be significantly higher. So it's all relative. It's quite difficult to work out what your true return is when you start kind of withdrawing money and moving things about and so on. But I do kind of keep a small note to it. It's not a big enough portfolio for me to really have a kind of real keen eye exactly as to what we've sold and lost and what the profits are. But at the end of the day, as long as I've got a rough idea of that, I'm quite happy with that. As the portfolio grows, maybe I might keep a better record of that, but I'm also not really planning, unless something comes along, then like a property or something like that, or some other better investment, I'm not planning on withdrawing that. So that's the end of the video. If you could whack the old like button, subscribe, all that jazz. Hope you like this video, and I shall see you in the next one.